Good morning, ladies and gentlemen. A very warm welcome on Market today. We are joined by Mr. Sandeep Kalra, the Chief Executive Officer of one of the most outperforming stocks in the market, Persistent Systems Limited. A very good morning to you, Mr. Kalra. And what a fantastic performance Persistent has come out with, a sequential 5.6% growth in top line, and of course, a 6 to 6.2% increase in the profit after tax at 306 crores. What were the two or three main drivers that were responsible for this sharp growth quarterly as also sequentially?
Good morning, Shailendra, and good to be with you on this meeting. Now, let me just summarize the results, and then we will go through the trends, etc. So, from our perspective, we saw a good quarter-on-quarter growth of 5.3% in dollar terms, and in rupee terms, it was 5.8%. This translates into 18.4% year-on-year and 20.1% year-on-year in rupee terms. Now, from a profit perspective, the EBIT margin came in at 14%. This was a 30 basis point improvement year on year. This is despite the fact that we gave the wage hike effective July 2024. And for your and other viewers' perspective, the wage hike typically impacts our margins by about 210 basis points in the quarter. So overall, we were able to deliver both a good revenue growth and a good consistent EBIT margin. Now, from the overall things that impacted the growth, the healthcare life sciences segment has been doing very well for us over the last year, and it came in pretty healthy, and it grew 71% year on year. 15.3% was the growth in BFSI. So these are the two sectors that led the growth for us. High-tech and emerging verticals was nearly flat year on year. So happy to answer any questions on this.
Right. Mr. Kalra, let's dive deeper into the numbers. How have the top 5 clients performed for Persistent, and what is the revenue that you are getting from clients which have more than $5 billion worth of business done each year?
So from an overall perspective, if you look at it, the top 5 customers revenue grew by 31.5%, and top 10 customers grew by 24.6%. And even if you were to look at the top 50, we had the top 50 grow by 20.9% year on year. So from an overall perspective, if you look at it, it was a fairly healthy growth from our various customer segments. And in fact, on a year-on-year basis, the number of customers in the 1 to 5 million bracket increased by 5, while those in the 10 to 20 million bracket increased by 4. Now, if you look at our top 100 revenue, it is responsible for about 81%. And from that perspective, it's a very good, customer mix and growth overall.
Okay. Mr. Kalra, what is the situation of attrition on a quarterly basis? Has it risen, or have you been able to hold back to your wonderful workforce?
Yeah, so from our perspective, last quarter, if I look at it to this quarter, it's relatively flat. Last quarter, we were at about 11.9%. From a trailing 12-month perspective, this time we are at about 12%. So it's very small difference, I would say nearly the same. So we have been able to hold the workforce. And please keep in mind, we are one of the leading technology services companies, and our talent is, obviously in the eyes of everyone else from a capability perspective. And so the fact that we are able to hold on to our attrition talks well about what we have to offer to our employees, and it bodes well for us.
Okay. Ladies and gentlemen, Persistent over the last 5 years has turned out to be a fantastic outperformer. Each year, the stock has returned 75% to long-term shareholders. And what you see on the chart is a phenomenal progress driven primarily by a very sharp increase and consistent increase in quarterly as well as annual run rate for both profit and net sales. Mr. Kalra, what does the outlook look like over the next 2 to 4 quarters? There are a lot of apprehensions in the US market, which is your mainstay, that it might slip into recession. What are your top clients telling you, and how do you feel about the next 4 quarters?
Yeah, so let's go a little bit back into the last 4-5 years. The last 4 to 5 years, we have seen the impact of things like COVID, where there was a lot of uncertainty. Coming out of COVID, we saw a sharp recovery, and thereafter we have been seeing the discussion about a potential recession for the last several years. And clients' spend has been muted, but despite whether the market was in COVID times or in good times or muted times, we have delivered consistent, growth. Our last 4 years have been 12.9%, 35%, 35%, and 14.5% yearly growth on a consistent basis in good times and bad. So we are relatively confident. We should be able to navigate whatever the market brings our way. Markets we don't control, how we react to it, how we work with our customers, how we help them become sharper and serve their customers better drives our growth. And our investments in technology, not to forget that the last 2 years have seen a significant pivot on AI. And in addition to whatever is happening in the market, this is a good, kind of a disruption that is happening in our markets. And thankfully, Persistent being a good, strong technology services company, we have leveraged it for our advantage and for delivering better services, building AI-led platforms like SaaS for product engineering and other things for the CIO market. So there is a significant traction we have on that, and we have the confidence we should be able to deliver well. We don't give forward-looking statements, so I would refrain from giving any numbers, but we are confident based on the bookings we have done, the pipeline we have, the traction we have on our platforms, etc. We should be able to deliver a healthy set of numbers over the next several quarters.
As they say in English, that the proof of the pudding is in its eating. Over the last 10 odd years, you've delivered phenomenal performance quarter on quarter, year on year. Let's hope that continues. Mr. Kalra, before we let you go, what are the 2 or 3 major risk factors that you see impacting, or at least, influencing Persistent's next 4 quarters?
So look, I would say overall, look, we don't control the environment, as I said. There could be things that are there with respect to US elections. There could be things with respect to the macroeconomic situations, the situation in the Middle East, and so on and so forth. So there could be curveballs like that. There could be things like COVID, which no one saw coming our way. So those things we don't control. But if the market, environment remains even where it is today, and there is no disruption overall in the marketplace, we are, fairly confident of continuing the good growth journey.
Okay. And my last question, Mr. Kalra, to you is, who will the Indian tech industry prefer as the US president, Ms. Kamala Harris or Mr. Donald Trump? Because US is the biggest market for India, and their choice of the US president impacts the Indian tech industry in a big way.
Yeah, so look, this is a fairly loaded question. I wouldn't say, we would prefer one or the other. It is for us to work in an environment which the, population at large in the US decides. It's the US, population that has to decide. And in fact, I'm also a US citizen. So from that perspective, whatever, the public mandate is, we'll work with that, and we'll work to do the best within that.
Okay, with that, Mr. Kalra, thank you so much for your time. And here's hoping that you top the 5.8, 5.9% sequential growth, both in top line and bottom line. Here's wishing you the best.
Thank you, and it was good talking to you.
This, ladies and gentlemen, was Mr. Sandeep Kalra, the CEO of one of the finest outperforming mid-cap software stocks on the Indian landscape. The company has come up with a very sharp 5.8% quarter-on-quarter growth in top line to 2,897 crore rupees, and profit after tax for the second quarter has grown 6.2% quarter-on-quarter to 325 crore rupees. The stock has done fantastically well over the last 1 year, up 75%, and that's the CAGR over the last 5 years as well.